Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve an example of holding company account. So this is the example of Anshima Limited and Sony Limited. So the balance sheet of Anshima Limited and Sony Limited as on 31st March 2016 is as follows. So this is the balance sheet of Anshima Limited and Sony Limited. So balance sheet is on 31st March 2016. So liabilities of Anshima Limited and Sony Limited is given. Assets of Anshima Limited and Sony Limited are given. Now first we need to understand that which company is holding company and which company is subsidiary company. Now holding company means what? The holding company is the company which holds the majority or whole of the shares of other company. So the other company is called as subsidiary company. So in this example, Anshima Limited is the holding company. See, in the other information, the point number 1 is saying that Anshima Limited acquired the shares of Sony Limited on 1st October 2015. Okay, so that means Anshima Limited is the holding company and Sony Limited is the subsidiary company. Okay, so and second adjustment is the bills payable of Anshima Limited represented 50,000 issued in favor of Sony Limited. So we have to prepare a consolidated balance sheet on 1st March 2016. Consolidated balance sheet means what? A combined balance sheet of holding company and subsidiary company. Okay, so here in this question the balance sheet of Anshima Limited and Sony Limited liabilities and assets are given differently. So this side is Anshima Limited liabilities and Sony Limited's liabilities. In asset side, Anshima Limited's assets and Sony Limited assets are given like buildings, machinery, stock, debtors, investment, etc. Okay, so now before we prepare consolidated balance sheet, we have to prepare certain working notes. Okay, like calculation of ratio, capital profit, revenue profit, then goodwill, then consolidated profit and loss. Okay, so before that, before preparing those notes, we have to note down some important things from the balance sheet. Now Sony Limited is a subsidiary company. So Sony Limited share capital is what? 17,50,000. So this is the amount of shares. We don't know the number of shares. We just know that one share is of 10 rupees. Okay, and for that we need to find the number of shares. Okay, now how much shares Anshima Limited has acquired of Sony Limited? Okay, see, Anshima Limited is what? Holding company. Anshima Limited has acquired the shares of Sony Limited on 1st October 2015. So how many shares Anshima Limited has acquired Sony Limited? So here in asset side under investment, it is given that shares of Sony Limited means Anshima Limited has acquired the shares of Sony Limited. The number of shares is 1,05,000. Okay, so these shares 1,05,000 shares the Anshima Limited has acquired the shares of Sony Limited. Okay, and remember on which date the shares has been acquired. So the shares has been acquired on 1st October 2015. Okay, and this balance sheet is as on 31st March 2016. That means the financial year begins for this Anshima Limited and Sony Limited begins on 1st April 2015 and ends on 31st March 2016, and in between of this year Anshima Limited has acquired the shares of Sony Limited. Okay, so we have to prepare consolidated balance sheet as on 31st March 2016. Okay, so this much is clear. We in this balance sheet we have to see the Sony Limited's share capital and investment, how many shares the Anshima Limited has acquired, and on which date the Anshima Limited has acquired the shares. Okay, so let's prepare the working note. After working note, okay, we will prepare consolidated balance sheet of holding company and subsidiary company. So before we prepare consolidated balance sheet, compulsory we have to make the working notes. Okay, on the basis of this working note, we can prepare the consolidated balance sheet of holding company and subsidiary company. So first we will write working note, First is calculation of ratio. Okay, first calculation is calculation of ratio. First of all, we need to find Sony Limited number of shares. Okay, see here, Sony Limited share capital is 17,50,000. We don't know number of shares of Sony Limited. So to find number of shares, okay, to find number of shares, we do share capital divided by per share. Okay, so Sony Limited share capital is 17,50,000. Okay, 17,50,000, and each share is of 10 rupees. So divide it by 10 rupees. So number of shares of Sony Limited is 1,75,000. Okay, 1,75,000 is the Sony Limited shares. Okay, and out of this, okay, out of 1,75,000, Anshima Limited has acquired 1,05,000 shares, okay, of Sony Limited. So to calculate ratio, first write Anshima Limited acquired the shares of Sony Limited on 1st October 2015. Okay, so now Sony Limited number of shares is what? 1,75,000. Okay, 1,75,000 are the shares of Sony Limited. From this, okay, from this, Anshima Limited acquired 1,05,000 shares. Okay, out of 1,75,000, Anshima Limited acquired 1,05,000 shares. Okay, so 1,05,000 shares is of Anshima Limited. Now remaining shares is how much? 1,75,000 minus 1,05,000. We get 70,000. So this 70,000 shares belongs to minority. Minority means other shares. Okay, other investors. So minority shares is 70,000. Okay, now find the ratio of 1,05,000 upon 70,000. So this zero get cancelled. 35 threes are 35 3s are 105 and 35 2s are 70. Okay, so ratio is 3:2. Okay, therefore ratio is 3:2. So 3, the share of Anshima Limited is 3 ratio, okay, and share of minority ratio is 2. Okay, 3:2, 2 is the ratio. On the basis of this ratio, we have to divide capital profit, revenue profit. Okay, so ratio is very important. So how we can find the ratio? On the basis of number of shares. Okay, so how much Sony Limited is having the shares, and out of that how much Anshima Limited has acquired, and remaining shares will belongs to minority. Okay, next we will calculate. Next calculation is calculation of capital profit. Capital profit. Okay, now see, financial year, okay, of Anshima Limited and Sony Limited. Now balance sheet is on what date? 31st March 2016. So opening of this financial year was 1st April 2015 and ending is 31st March 2016. And in between the year, okay, Anshima Limited has acquired the shares of Sony Limited on 1st October 2015. Okay, see, fine, shares are acquired. Shares acquired date is what? 1st October 2015. So that means that from 1st April 2015 to 1st October 2015 will be what? The time or the period of pre-acquisition. Okay, and after acquisition, that means from 1st October 2015 to 31st March 2016. This time period will be of post acquisition. Okay, so before acquisition date means before 1st October. Okay, that means from 1st April 2015 to 1st October 2015, whatever is the profit will be called as capital profit. Okay, it will be called as capital profit. And after acquisition, that means from 1st October 2015 to 31st March 2016 will be revenue profit. Whatever profit is earned during that period will be called as revenue profit. Okay, so for capital, calculation of capital profit, we have to take the months or time or date before the acquisition. That means profit for half year. Okay, why half year? If you calculate the months from 1st April to 1st October, total there are 6 months. So in 1 year there are 12 months. If we divide into 2 parts, okay, 2 half, one half will be of 6 months and other half will be of 6 months. Okay, so profit. Now how much is the profit? Okay, see here, profit in the liability side they have given that profit for the year. Now you will take the for calculation of capital profit, revenue profit, you will take all the values of subsidiary company. Okay, you will take the values of subsidiary company. Subsidiary company is what? Sony Limited. So profit for the year is how much of Sony Limited? 2,62,000. Okay, profit for the year is 2,62,000. We are not taking general reserves because in this example Sony Limited general reserves are not there. If there are general reserves, so we have to consider general reserve in the calculation of capital profit. Here in this example, general reserves are not given, hence we are not taking it, okay, for the calculation of capital profit and revenue profit. Here only the profit for the year is given, that is what, 2,62,000. okay, so this 2,62,000, the profit for the year, is some part of that profit of 2,62,000 is of pre, okay, and some part is of post acquisition. So for calculation of capital profit, we take the months of before acquisition. So profit for the year, half year, okay, will be what, 1st April 2015, okay, 1st April 2015 to 1st October 2015. Why? Because on this date, 1st October 2015, the shares were acquired. That means from 1st April to 1st October, total 6 months are there, okay, total 6 months, okay, 6 months. So what is the profit for the year? 2,62,000, okay, 2,62,000 divided by 2, okay, half year. So profit we get 1,31,000, okay. So 1,31,000 is what? A capital profit. It is a capital profit. So this capital profit we have to divide it to Anshima Limited and to minority, okay. So the ratio we know. Hope this point is clear about calculation of capital profit. For capital profit and for revenue profit, we have to take the months into consideration. Beginning of financial year and on which date the shares are acquired, okay. From that time, from beginning of financial year and acquire date, okay, shares acquired date, the before that it will be called as pre-acquisition, okay, and the profit earned during that period will be called as capital profit, and after acquisition to the end of financial year, the profit earned during that period will be called as revenue profit, okay. Now distribute this capital profit. Capital profit is 1,31,000. Okay, capital profit is 1,31,000. You have to divide it to Anshima Limited, and minority. So capital profit is 1,31,000 multiply by ratio of Anshima Limited is 3 and minority is 2. So share of Anshima Limited in capital profit will be 3/5. Okay, 5 how? 3 plus 2, 5. And minority interest 1,31,000 multiply by 2 divided by 5. So 1 lakh So 1,31,000 multiply by 3 divided by 5. We get 78,600. Okay, so this is the share of Anshima Limited in capital profit, 78,600, and remaining will be minority. So minority share is 52,400. Okay, out of 1,31,000. Okay, out of 1,31,000, the out of 1,31,000, that is capital profit. So the share of Anshima Limited out of 1,31,000 is 78,600 and minority share is 52,400. Okay. Next calculation is of, third calculation is calculation of revenue profit. Calculation of revenue profit. Now for revenue profit, you will take the months of for calculation you will take acquisition. So the shares were acquired on 1st October 2015 and financial year ends on 31st March 2016. So total months, if you count, there will be 6 months. So for calculation of revenue profit, you will take profit for half year. That means 1st October 2015 to 31st March 2016. Total how many months? 6 months. And profit for the year is how much? Profit for the year of Sony Limited is 2,62,000. Okay. So divide it, 2,62,000 divided by, so revenue profit will come same, 1,31,000. Okay, so 1,31,000 is what? A revenue profit. It is a revenue profit. So this revenue profit, again we have to Anshima Limited and with minority limited. Minority. Okay, so 1,31,000 is a revenue profit. Distribute it amongst Anshima Limited, share of Anshima Limited and share of minority in revenue profit. So 1,31,000 multiply by, ratio of Anshima Limited is 3/5 and minority is 2/5. So the revenue profit of Anshima Limited, share of revenue profit will be same, 78,600. This is Anshima Limited shares in revenue profit, and 52,400 is the share of minority. Clear this much? So again I will repeat that before acquisition, whatever profit the company earns will be considered as pre, that means capital profit, and after acquisition whatever the profit the company earns, it will be considered as revenue profit. Okay, after calculation of revenue profit, next calculation is of, fourth calculation is of calculation of minority interest. Calculation of minority interest. Okay, for calculation of minority interest, we need how much shares the minority have in the Sony Limited. So if you see here, total Sony Limited shares were 1,75,000. Out of 1,75,000, 1,05,000 belongs to Anshima Limited and remaining share minority. So 70,000 shares belongs to minority interest. 70,000 shares in Sony Limited. Okay, in Sony Limited, 10 rupees each. Okay, that means 70,000 multiply by 10. Multiply by 10, we get 7 lakh. We get 7 lakh. Okay, hope you have understood. Now shares of minority interest is minority in Sony Limited is how much? 70,000, and each share value is what? 10 rupees. So share capital of minority becomes 7 lakh rupees. Next we have to add share in capital profit. So what is the share of minority in capital profit? In capital profit 52,400. So we have to add it in 7 lakh rupees. So 52,000, it is the share of minority in capital profit. Next, add shares in, means share of minority in revenue profit. So in revenue profit, the minority share is 52,400. 52,400. So add 7 lakhs plus 52,400 plus 52,400, we get 8 lakhs 48,000. Okay, 804800. So this is the minority interest, calculation of minority interest. Now fifth calculation is of calculation of cost of control, that means goodwill. Why we do this calculation? Just to find whether Anshima Limited has invested, just to check whether Anshima Limited has got profit or loss by investing in Sony Limited. Do the calculation of cost of control, that is goodwill. Okay, so for cost of control we need, okay, how much shares the Anshima Limited has acquired of Sony Limited and at what cost. Okay, so here in asset side, in investment, if you see that shares of Sony Limited 1,05,000 shares at cost, that means 1,05,000 shares were acquired at the price of 16,65,000. So this is at cost. Okay, so for that, for the calculation of cost of control, we will take 1,05,000 investment in Sony Limited at cost. Okay, so amount is 16,65,000. Okay, 16,65,000. Okay, so at this cost the shares were invested in Sony Limited. Next, reduce the face value of 1,05,000 shares, and E at rupees what? 10 rupees each. Okay, that means 1,05,000 multiply by 10. Multiply it by 10. We get 1,50,000. Okay, 1,50,000. So if we minus 16,65,000 by 1,50,000, we get 6,15,000. So that means it is a loss for us. Okay. Now here minus the share of holding company. Which is the holding company? Anshima Limited. Okay, Anshima Limited capital profit. What is the share of Anshima Limited in capital profit? So it is 78,600. So reduce it from 6,15,000. 78,600. The remaining is 5,36,400. So this is a goodwill. Okay, this is what? A goodwill, and we have to give the transfer this goodwill to asset side in the consolidated profit, in the consolidated balance sheet. Okay, see, in cost of control, okay, for the calculation of cost of control, first take the number of investment, number of shares, okay, in Sony Limited at the cost. The cost is what? 16,65,000. Then reduce the face value. Okay, so each share is how much? 10 rupees. So we get 10,50,000. Okay, then 6,15,000 is remaining, and from this amount reduce the holding company's share in capital profit. Okay, how much is the share of capital profit of holding company? That is 78,600. So remaining balance we get is, consider it as goodwill. Now last calculation is of consolidated profit and loss. Calculation of consolidated profit and loss account. So for profit and loss account, okay, for consolidated profit and loss account, we have to take the balance of profit of holding company. Okay, so profit for the year of holding company. Profit for the year of holding company is what? 6,20,000. Okay, here one more zero is added here. 6,20,000. So profit, there is a typing mistake in question. Profit and loss balance of holding company is 6,20,000, and add share of holding company. Who is the holding company? Anshima Limited, okay, is the holding company in revenue profit. So what is the share of Anshima Limited in revenue profit? So revenue profit share is 78,600. 600. So add these two things, we get 6,98,600. So this is a consolidated profit and loss amount, and this profit and loss amount we will write in liability sides. Okay, now all the calculations we have prepared. Okay, like calculation of ratio, then calculation of capital profit, then calculation of revenue, then calculation of minority interest, calculation of cost of control, and calculation of consolidated profit and loss account. So just remember that what things or what items particulars we have to take for the calculation of capital profit, revenue profit, then cost of control, okay, and consolidated balance sheet. So these are the items which we have to take into consideration for the calculation of this all heads. Okay, now after this calculation we have to prepare consolidated profit and loss consolidated balance sheet of Anshima Limited and its subsidiary company, that is Sony Limited, as on 31st March 2016. So write consolidated, prepare consolidated balance sheet of Anshima Limited and Sony Limited as on 31st March 2016. In question, the assets and liabilities of both the companies were given separately. So in consolidated means we have to combine their assets and liabilities and prepare one balance sheet. Okay, so prepare this balance sheet of Anshima Limited and Sony Limited on 31st March 2016. Liabilities amount, liabilities amount. Two columns. Why we require? Because we have, if any adjustment, we have to solve in inner column and write the final amount in outer column. Now what first thing will come in asset side? First will come the goodwill. Okay, so goodwill we have made the calculation. Okay, goodwill is what? How much is the goodwill amount? Goodwill is 5,36,400. Okay, so write in outer column 5,36,400 is goodwill. Now the things which we did not take, the particulars which we did not take for the calculation of working note, those items will come in the balance sheet. Okay, so buildings are what? Of Anshima Limited 8,50,000 plus Sony Limited is what? 87,000. Okay, so buildings of Anshima Limited is 8,50,000. Okay, 8,50,000, and Sony Limited is 87,000. Buildings of Sony Limited is 87,000. So add 8,50,000 plus 87,000, total we get 9,37,000. Okay, next is after building is machinery. Okay, after machinery stock, and after stock we have debtors. Okay, so check the amount. Machinery 23,27,000 plus 12,35,000. So machinery of Anshima Limited is 23,27,000, and Sony Limited machinery is 12,35,000. 12,35,000. Add and write the final amount in outer column. So we get 35,62,000. Okay, after machinery we have stock. Take the values of stock: 8,40,000 and 4,25,000 of Sony Limited. Stock Anshima Limited 8,40,000 plus Sony Limited stock is 4,25,000. In outer column add 12,65,000. Okay, after stock we have debtors. Debtor is 8,53,000 plus 5,37,000. Debtors of Anshima and Sony. These values we did not take for the calculation. That's why we are posting them in assets in balance sheet. Okay. Write the amount in outer column 13,09,000. Now after that is investment. We cannot take investment because this value we have already considered in the calculation of cost of control. So leave this. Next is what? Bills receivable. Now see, on bills receivable and bills payable we have adjustment. This adjustment is nothing but the intercompany owning. Okay, that is bills payable of Anshima Limited represented 15,000 issued in favor of Sony Limited. That means this 15,000 we will reduce from bills receivable as well as from bills payable, and this adjustment is nothing but intercompany owning. So write bills receivable. Bills receivable. Here we have only Sony Limited bills receivable, that is 1,08,000. Okay, less intercompany owning. That means 15,000 we have to reduce from bills receivable in outer column 93,000. Okay, so all the items of the balance sheets we have posted in the consolidated balance sheet. Now we will move to liabilities. Now in liabilities, first item is share capital. Now in consolidated balance sheet you will write the amount of only holding company share capital, that is Anshima Limited. We will not write the subsidiary company. Why? Because this amount we have already took into the consideration of calculation. So share capital of holding companies 43,75,000. Okay, after share capital general reserve of whose holding company. Okay, Sony Limited is not given, so that's why we are not considering that. So Anshima Limited is 6,57,000 general reserves. 6,57,000. After that is profit for the year. Now this profit for the year which is given in the question's balance sheet, you will not take this amount. You will take the amount which we have calculated. Okay, that means calculation of consolidated profit and loss is how much? Profit and loss is 6,98,600. So profit and loss 6,98,600. After profit and loss we have creditors of Anshima Limited and creditors of Sony Limited. Add this two amount of creditors and write in the outer column. So creditors of Anshima and Sony. Creditors of Anshima is 7,95,000 and Sony is 3,80,000. Outer column 11,75,000. Okay. After that, after creditors we have bills payable, that is 88,000. So adjustment is what? Bills payable of Anshima Limited represented 15,000. So reduce 15,000 from 88,000. So like first we reduce from bills receivable, the same thing, same amount we have to reduce from bills payable also. Bills payable is how much? 88,000. Okay, less intercompany owning 15,000. In outer column 73,000. Okay, and one more, the most, now liability side is completed, but here in liability side the important entry we have to write, that is minority interest. Okay, this is what liabilities for us, minority interest. So minority interest is not given in question balance sheet. Okay, but we have calculated the minority interest amount, that is what? 8,48,4,800. Okay, so write in outer column 8,04,800. Okay, now all the entries we have posted in balance sheet, that means we have passed in consolidated balance sheet. Now what we have to do? We have to tally assets and liabilities. Okay, if assets and liabilities amount are same, that means our answer is same. Okay, so add the amounts of liabilities, 5 of goodwill, plus building 9370000 plus 35,62,000 plus stock amount then amount of debtors, amount of bills receivable, wait, something is missing here. The debtor amount is 13,90,000. Okay, 13,90,000. So the asset value we get 77,834,000. So 77,83,400. Okay, now do add all the amounts of liabilities. So if you check the amount of assets and check the amount of liabilities, the amount is same. Okay, so that means 77,83,400. Okay, so this is the total balance sheet. Okay, so both assets as well as liabilities are same. So in this way you have to prepare the consolidated balance sheet of holding company, that means combine. So first you have to prepare the working note like calculation of ratio, on which ratio the holding company and minority will get the amount, then calculation of capital profit, calculation of revenue profit, and calculation of minority interest, calculation of cost of control, and at the last there is you have to find calculation of consolidated profit and loss, and then finally prepare the consolidated balance sheet of holding company and subsidiary company. Hope you have understood how to prepare consolidated balance sheet of holding company. Thank you. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.